we're joined from London by the CEO of QW Capital, Mr. Gianluca Lubifalo. Mr. Lubifalo, welcome to the Q News Economic Bulletin. What are the strategic, deeper implications of Russia and China conducting nearly all bilateral trade in rubles and yuan?
Yes, good evening. It's not a news, actually. It's a confirmation of what is happening. We've been saying this for quite some time as well with you in the past, that there is a clear tendency and push for a de-dollarization, even, let's say, reducing the euro dependency on this settlement, but euro has always been marginal. So the key point is on dollar. So the dollarization is not an event, is not just a new from this last Russia and China deal. It's just a trend that is within the BRICS or the Global South framework and is actually expanding its reach. So it's something that has a real, direct, important geopolitical implication.
Well, does it mark a structural shift in the global financial order, or is it mainly a tactical response to Western sanctions?
No. It's been happening before trading sanction. I would argue that the seed for this was already pre-Ukraine-Russia war. And actually, we can even claim that part of the implication of this war, let's say proxy war, they can even almost be considered as a consequences of this de-dollarization. To me, the biggest game in town over the last 5 years has been, by and large, this tendency of part of the world to de-dollarize. So don't depend on dollar to settle their trade. What it means that basically there is a cap, a market cap on the amount of financing the US can rely upon to fund its debt. The implications are immense. Don't forget that when dollar became the global reserve currency to substitute the previous one was the British pound, Giscard d'Estaing was at the time the foreign minister in France and then became prime minister and president, was saying that this is an exorbitant privilege. And that is actually is not an exaggeration. To be running the global reserve currency is a huge privilege. Now, there are other countries who are actually questioning that. If you look at the average historically of years in which a currency was the global reserve currency, we had the French franc, we had even the Portuguese escudo for a few years, that was less than 20 years. Anyway, the average is around 40 to 50 years. And the US has gone already above 80 years. So in theory, someone can argue that historically, it's been far beyond the average in the past. Having said that, we don't have at the moment a replacement because yes, China and Russia can settle their trade into renminbi or into ruble, but it would be very unlikely, at least on the short term, to see that other country will settle their trade agreement replacing the dollar one into ruble and renminbi. So the point of the strength at the moment of the dollar, the case in favor of the dollar to keep being the global reserve currency, is that at the moment within the physical and the fiat currency, we don't have a credible substitute. Ruble because it's only obviously trading in Russia, renminbi because of the control of capital by the Chinese authorities. So at the moment there is not a credible replacement. But
yes, go ahead.
Today. Yeah. But, if we extend to digital currency, that is a different game because that's why the Genius Act was pushed and forward and passed with 65 to 22 vote in US, because it could very well be that if we limit our search into the physical currency, yes, my previous statement, there is not a reliable substitute for dollar is still confirmed. Now, I'm not too sure I would be able to keep the same sentence if we extend to digital currency. Digital currency backed by real asset could very well be a substitute.
Mr. Lubifalo, now, the de-dollarization has been going on for a while, and what's happening now is merely a confirmation of that. So does that prove the sustainability of this trade model for both countries? And you really don't think any other countries could try and follow suit, or other countries that would try and follow suit need to be at some sort of a trade conflict with the US?
Look, we are just experiencing that. Look about all the oil trade between Saudi Arabia and China, is already happening in renminbi. So it's not an hypothesis. Most of the BRICS countries are doing settlement out of dollars. So it's already happening. Question is, this is actually, if you think about it, as a reflection that we are assuming that we are in a multipolar world, but the multipolar world ended, if you like, just after the great financial crisis, with the rising power of China, with the credit impulse that was the biggest support of the global recovery in financial market and the economy, not just the monetary policy by most of central bank in the Western world. What really was the backbone of the recovery from 2009 till, let's say, at least 2015 was the credit impulse by China. So this basically meaning that we no longer have a unipolar world as we had from the, let's say, 92, so from the fall 89 to 92, the fall of the Berlin Wall, and the dissolvement of the Russian Confederation. We then had, so the Soviet Union, we then had the real unipolar world, and the unipolar world was reflected with one reserve currency. We now have to acknowledge that we no longer have a unipolar world. We have a multipolar world for a time being with one currency, but could very well be that the multipolar world we are living, that we are experiencing, we are observing on a day-to-day basis, will be reflected as well in a world that won't have just one reserve currency. It is very natural.
Mm-hmm. Could liquidity or exchange rate volatility or the limited convertibility of the yuan pose any possible constraint?
For the one to become a global reserve currency, absolutely yes. It's not in the position to be. But here, I'm not sure China has an interest in replacing dollar. Is interest in acknowledging their currency as one of the potential candidates, but I'm not too sure they are really interested in replacing. Maybe replacing the dollar and having one reserve currency as a global one is maybe yesterday world. So we may have to understand that we're going to be in a multipolar world, so multi-currency as a reference, and that's why we're having more macro volatility. So, I mean, the question is, are we sure? I can tell you that I'm pretty comfortable over the next few years, we still have the dollar as a global reserve currency. I'm not sure that we're going to have in 20 years' time, but I'm not sure we're going to have one reserve currency in 20 years. We may have more than that.
Mm-hmm. China's new debt management department aims to address the hidden local government debt. What does this move tell us about the depth of China's fiscal challenges? How much risk does local debt pose to the national economic stability?
Now, what they call it hidden or the implicit debt is all the local government. That is true when we are talking about the credit impulse, so the liquidity that was injected into the system in China was done through local authority. That's how the real estate, push was that then transform itself into a bubble that they assess and they kind to deflate. It was always through local government authority, or even the famous wealth management product that they were a kind of finance that lost a bit control. Yes, it's true, it's always a local authority, but we have to understand that China economy is, yes, we think as a dictatorship, as a centralized government, but actually the local authority are much more independent than what we think, and they are the base of their kind of capitalism. So yes, they will need now to control, they need to rein on it, they need to kind of put a limit on this, but don't forget that the same local authority who have been issuing this implicit in the debt are as well the real engine of the China expansion. Now we're having a slowdown. In any slowdown, what the authority do? Try to control on that to make sure that we have the condition for the recovery. So this is very natural. I'm not particularly surprised.
Mm-hmm. Well, what about China's extension and expansion of the visa-free policies to European countries, suggesting a renewed openness? Is this a signal that Beijing is pivoting back towards an economic diplomacy after years of inward focus and geopolitical tension?
Yeah, China is trying to do, so first of all, yes, I agree, it's a sign of openness, but don't forget that China always relied on export markets. So their economy has been based on the fact that they became the supply chain for industrial production of the world, the engine of the industrial production of the world. Now they're trying to having their consumer to become one of, not like the US who rely for consumer for 70% of the GDP, but they want to increase the share of the internal consumption. To do that, they need to make the economy more open. They need to have tourism. They need to have student visitor. They need to have family going back and see their family, people living at Chinese citizens living abroad. There are many in France being more free to go and spend 30 days there. So they want their economy is part of the new idea that the internal consumption, even through tourism, even through visitor, has to become more relevant to the economy than production and export. That is consistent with their long-term plan that was established not on this convention of the Communist Party, but on the two convention ago.
Mm-hmm. Do you expect any sort of reaction from the US, from the US dollar?
I mean, no. In reality, the US dollar is at the moment is one of the short dollar is one of the most common trade at the moment. So anytime we see any event, we see the dollar strengthening versus euro like the last few days or another currency. But don't forget that when we look at currency, you always have to think that is a currency trade is not a trade. A trade versus another is by definition a pair trading. So you're long something, you're short other or another one by definition. So in the case of dollar, you are short dollar, long euro. Mm-hmm. So when there is such a huge concentration of position in one go, everybody is short dollar versus anything else, is this position is very sensitive to any little change. So any little change will trigger some technical level for which then the dollar will strengthen. So we want to keep seeing dollar strengthening on occasion, but it's actually still nowadays the most common trade in the foreign exchange market, short dollar.
Yes. Mr. Gianluca Lubefalo, the CEO of QW Capital, thank you very much for joining us from London, sir.